What impact's likely to have on our market at the open? Stan Shamu joins us from IG in Melbourne. Yeah, what's your takeout from what Ben Bernanke was just saying there, Stan?
Morning, Brady. Yeah, absolutely. It seems like Ben Bernanke came out and really lit up the price boards across the globe today. Of course, the Fed minutes themselves were very mixed. We didn't really have any key takeaways from that, apart from the fact that, look, tapering is probably going to happen as long as the economic recovery continues. But with Bernanke's comments, it certainly looks like he's happy to be very accommodative. Of course, that key trigger, or that everyone thought was the trigger, the 6.5% unemployment rate, he said it's only a threshold and doesn't really necessarily mean they'll start tapering off as soon as it hits that level. So it really came out and poured cold water on some of these very hawkish analysts out there, especially with the tapering camp still firmly around that September mark. I think we'll start seeing some of these analysts start to sort of taper off on those expectations as well. So we'll have to see how this affects the rest of the analyst community. But at the moment, it certainly looks like markets have taken this in stride. Just that momentous drop in the US dollar has really told the whole story. We had the dollar index trading about over 84 at about 84.64 yesterday, and now it's back to around 83.49. So that really has given a lot of relief for the risk space. I think equities will absolutely benefit from this, and I think the key moves have really been in the FX space, and that will probably filter through to the rest of the asset classes as the Asian session develops today. Of course, the FX space generally is a leading indicator of what sentiment is, and certainly sentiment at the moment is to the upside for risk. We saw the Aussie and the Euro trade significantly higher against the greenback, but the biggest loser, I suppose, was the yen or the Japan, really, where the dollar yen slipped below 100 to a low of about 99.39. And of course, we do know that this generally has an adverse effect on Japanese equities, and that's probably going to be the key focus of Asia today.
So just to be clear, Stan, what you were hearing from his remarks was that interest rates will stay low for the foreseeable future, as he's been saying all along. And in terms of tapering, the sense you were getting from when that might happen?
Yeah, well, we probably were just looking at exactly what most of the analysts were looking at, and that was that the information we had was pointing towards possibly September tapering. But of course, I think everyone was overly focusing on the unemployment rate dropping to 6.5%. And with the rate at which the payrolls were improving, then most analysts felt that this was almost a given, that we'll get tapering starting off in September. But the key language from his speech was that 6.5% is merely a threshold, not necessarily a trigger for tapering. So it generally means that if other metrics in the economy aren't quite where he wants them to be, and he did say inflation remains relatively benign and it's expected to remain that way for a while, then he probably wants to see prices rising as well. And he wants to see that household income rising, and as well house prices rising to a level where he feels comfortable that the economy is on a more sustainable recovery path before necessarily saying we'll start tapering off. So I think that's probably going to be the game changer. It's not just unemployment, and I think analysts will have to start looking at the rest of the matrix that really drive the economy, or really show that the economy is in a stable recovery mode before they start talking about tapering again.
Just in terms of that fall that you talked about there in the US dollar yen cross there, and of course Japan in focus today with the Bank of Japan, the outcome of that meeting there, what can we expect from here?
I think not many analysts were expecting any changes or additions to the current stimulus that the BOJ is already providing. I think the general consensus is that the BOJ has done enough for now, and we're expecting to see Japan continue its recovery path without any real problems or hiccups along the way. But with the dollar yen now dropping below 100 down to that 99.39 level, then some will probably start feeling that perhaps the BOJ will have to say something to make sure that they keep confidence intact for Japanese investors as we head particularly towards those upper house elections in a week and a half's time or so. So that might be the little bit of a twist that we might get in Asia. But of course, consensus is for no change today. But of course, there are some of the comments that might come up out of Japan might see a little bit of volatility for the region. With the dollar yen falling significantly, the Nikkei is actually pointing down 0.1%, whilst most of the other equity markets in the region are starting to head higher following Bernanke's comments as well. So it should be quite an interesting day for the yen and in turn for Japanese equities.
And just in terms of the Aussie, as you mentioned there, it was at 90, well below 91 US cents at the low in the early hours this morning, and rising to about 92.3 after Ben Bernanke's comments there. What's likely to be the next catalyst for it then too? Obviously, we've got some jobs numbers out here locally.
Yeah, I think with the Aussie dollar, of course, it's really taken that US dollar weakness in stride, and it has been one of the biggest beneficiaries of that. But I think with the jobs numbers due out today, we should take this gain in the Aussie dollar with a little bit of a pinch of salt, really, because I think with the recent matrix really showing that the Australian economy is not in a good state, particularly with the ANZ job ads disappointing, we had Westpac consumer confidence disappointing, and NAB business confidence also disappointing, then it's really hard to see jobs show any significant strength. I think the expectation is for the unemployment rate to actually go up to 5.6% from 5.5% with not many jobs added. I think 300 was one of the top sort of estimates that I saw. But of course, if we do miss on the jobs numbers front, which is something that's not really too surprising, then we could see a swift pullback in the Aussie dollar in the Asian session today. And this will probably prompt some of these Aussie dollar bears to start reigniting those calls for an August rate cut, which a lot of analysts are starting to talk about now. So this should be quite interesting for the Aussie dollar, and we'll have to really see whether or not the recent matrix are an accurate indicator of the fact that the economy is moving backwards. And of course, we even heard from Glenn Stevens himself over the past week or so saying that he expects unemployment to tick higher in Australia in the short term.
In terms then of the ASX 200, what's your opening call?
We're actually calling it down 0.3% before about 7 a.m. and now we're actually calling it up 0.3% to 4,915. So that Bernanke speech has really been a massive game changer for the Australian market. Of course, the US dollar tends to have a significant impact on the commodities space, and I think we'll probably see a lot of the metal space along with oil drift higher early in Asia, just responding to that move in the US dollar. And of course, this will in turn be quite positive for the resource names today. So I think it's a situation where we'll probably see the risk space and the risk space and particularly the cyclical names lead the recovery today. I think gold will probably be one of the biggest beneficiaries. Of course, it was up about 1.5 to 1.7% following that US dollar weakness, and that will benefit the likes of Newcrest for a short-term bounce. And of course, there's also reports suggesting that Newcrest is looking at some job cuts at its Australian operations, so that could also benefit the stock in the short term. In terms of other commodities, I think oil is one of the best performers at the moment. We saw a sharp drop in inventories overnight as well, and that should be quite positive for some of the oil and gas stocks that we've got. Particularly Santos has had a very good run lately, and we expect to see it continue its run in the short term. And apart from those main commodities, we also have the rare earth stocks like Lynas and Arafura possibly in for a good day after big gains for rare earth stocks in the US. So it should be quite a good day for those guys, and we expect to just see the risk space enjoy a slight recovery at the open and potentially increase on that should the jobs numbers show something that's a slightly market friendly today.
Yeah, they do surprise, don't they? All right, they tend to. Thanks so much for that, Stan.
Cheers, Brady.
Stan Shamu there from IG in Melbourne. Stay with us. Coming up on First Business, we will certainly have more of a look at the session on Wall Street after the FOMC minutes.